You're probably aware that the economy is addicted to low interest rates. And of course, without them, there's nothing but pain. In today's video, we are going to look at what's happening here as a result. You came here for the truth, so let me unveil that for you. It's important that we understand what's happening. I'm going to give you one indication, and then we're going to look at what's happening in the economy with the jobs and some wild indications of what's really going on. That's what we'll look at beginning with this. Well, I want to look at the shipping industry. When we look at freight, it tells a story. And we're going to see what's happening here from this one indicator, which is the Baltic Dry Index. And it is way down off its peak, that crazy time in 2021. Certainly, it's been higher. In 2008, it was much, much higher than even that peak in 2021. But we are off the highs that, even in recent times as well. This is just one way to look at it. And it shows us that overall, there isn't that strength. And you look at it in a different way. The prices that you pay for a shipping container from any location to any location, all the major hubs, the prices are down back to where they were largely before 2020. So there was an anomaly, certainly during this period, 2020 into 2021, leading all the way into 2022. And these companies made a profit. And one of those companies was the biggest in the world, Maersk. Now, you can see things have certainly turned around. Their stock has performed extremely poorly over the last couple years, tracking exactly what you saw just a moment ago, where as the prices were going through the roof, so was their stock. And now things have changed. What does it tell us? Is it because of that one particular stock that's having a problem? Is it just because of the prices? Or is there something else? Well, here you can see this one company, and just to let you know, they have laid off 10,000 employees. We've seen it with the banks. We've seen it all over the place. Many different companies are getting rid of people today, and it seems to be every industry. At this time, it's not like a major sell-off. It's not a major deal. They're, taking people from here, taking from there, 5%, 2%, 10% in some cases. But we're not quite, 2008 levels yet. But I'm paying attention. Are you? Let's look further at this and start to ask a few questions. The overall globally right now, manufacturing PMI is in a contraction. What does that tell us? Well, it tells us a few things. And we have to ask the question that Ryan Reynolds is right here, but why? And it's important. If you look at what's happening on a global level, we take the shipping, we take the freight, and that starts to answer some questions. If China deals with Brazil, China is dealing with the US, United States is dealing with Europe, we can look at the imports and exports. We can look at that on many different levels. We can see individual companies. We can look at the prices of the containers. We could see the different data that's coming through. Usually it's a bit delayed. Either way, we start to track all these little dots. We connect them together. At least I do that here on the channel. Do that for you to make your life easy. And so what we are seeing is, a big change in some cases, where there's not enough imports coming through and there's not enough exports going out. What does that tell us? Well, the consumer may have either had, just a change of heart. They don't want that stuff anymore. Everybody for a while there was buying quinoa, and it was like a big problem in Bolivia and all these other places where they said, we don't even have any for the domestic consumption anymore because that became a trend. What about celery? For a while, everybody was eating and juicing celery, and the stores, the prices just went through the roof. These things do happen. But when we're seeing it globally and we're seeing it affecting just about everything, it's not a trend on TikTok, okay? There's much more going on. And so Ryan Reynolds says, why? Let me show you. This is a big one. Big one. Since April 2023. Look at the difference in these two types of surveys. You have on the left-hand side, the jobs, as they say, which is the establishment survey. That's the numbers you'll see in the CNBCs and the Bloombergs and all over the news. Okay. Since April 2023, 1.2 million. But what's that other one? It looks a lot smaller. And that's actual employees. It's a very different number. In fact, it's off by 1 million. There's a 1 million difference between household survey and the establishment survey. And I've gone in depth on both of these before in other videos. But what this basically means is, well, the jobs numbers can be skewed. They can be skewed by one major thing. I'll show you that now. Multiple job holders. There right now are a record number of multiple job holders. That is 8.5 million. Multiple job holders. They could have 2 jobs. They could have 3 and 4 jobs. What about temporary jobs? That is affecting it as well. And so when you see we've created 1 million jobs. Have they? Or have people been getting laid off? They're coming back. They're getting laid off. They're coming back. Or, they work 9 to 5 here. They work, on the weekend over there. They're doing all these things to make up for the fact that life is too expensive because the central banks devalued their currencies and now they got to take multiple jobs. That's you. That's your neighbors. That's the people in general. That's what we've got to deal with today because of their mismanagement. They forced this so-called legal tender on us, and then they go mismanage it, and we have to pay the price. Why do we have to pay the price for that? That's what we got to deal with, okay? And it's my job, it's my duty to bring you the truth so that you can thrive and prosper during these times. So let's look further into it. Knowledge is the first step. 62% of Americans are still living paycheck to paycheck, making it the main financial lifestyle. I mean, when I read that quote, further down, they give you the full thing, but essentially saying, for the majority of people, paycheck to paycheck is the main way to go. And that is a shocker. Now, the number of 62%, you get a survey here, survey there, doesn't matter how you want to look at that. Some I've seen 70%, some whatever. The point is, the vast majority of people, no matter what their income is, they're living paycheck to paycheck. Is that a good, strong, healthy economy? Well, you can tell me. I have an opinion. Look at this. M2 as a percentage of the GDP versus GDP growth. And what we're seeing here is that the M2, that's the money supply, like how much cash is in circulation, okay? That growth has come down a lot. And we need the money supply to grow in order for the economy to grow, because this is a debt-based system. And so during this period where we, pumped in so much, we're now going in the opposite direction. And the economy doesn't like that. The stock market doesn't like that. The bond market doesn't. Nothing likes that. When things get all out of whack, nothing makes sense during these periods because we've been so heavily reliant, like an addict, just waiting for their next hit. Come on, give it to me. But unfortunately, right now, it doesn't look like that's happening. Now the Fed, the preemptive Fed pivot has happened where Jerome Powell has basically said, you know what, we're kind of done. But that isn't the adrenaline shot that's needed right now. It's not the espresso. So what I'm seeing here is that contraction, which does have a deflationary or a slowdown effect on the economy in general. Markets, different story, but the economy in general. We're seeing it. All the indications have popped up, no question. Retail sales don't predict recessions. And so while we can see that there might not be the best correlation here, I just wanted to show you that during this period that usually it's during the recession, you could argue like in 2008, where, people are scared, so they stop spending, but not necessarily beforehand. And the reason I mention this is until somebody loses their job, they're going to spend paycheck to paycheck. And that's it. You don't say, well, the consumer has slowed down, therefore recession's coming, therefore that. No, don't. They will go wildly coyote right off the cliff. And then when that happens, they're looking up during that period, and they're, watching the roadrunner as they fall down to the ground. That's what goes on every single time. Compare this every single time. Fed rate hikes, unemployment, and recessions. You see it. It's incredible. When we look at it, everything's all fine. Unemployment's going down, 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 down. Oh, we have a recession. Flips the opposite way. Exactly on cue when we look at it with the interest rates. They are completely correlated each and every single time. It's unbelievable. But that's the world we are in, where cycles repeat, patterns repeat, and we need to pay attention to those. You could see what's happening. I think it's extremely important that we follow that because it's going to give us the telltale signs. So what have we learned? Number one, we got to understand right here and now that the economy is looking weak on many fronts. What does the economy need in order for that to turn around, in order for jobs to be created, real jobs to be created, and people to feel more prosperity and abundance? The short-term solution is that adrenaline shot, that they would print more money, devalue the currency. But in the short run, they'd be, I don't want to call it fixing, but that's what they would say. They would be fixing the problem. Long term, that makes it much worse, even in the medium term. Why? Because they're going to make home prices go up much higher, making them much more unaffordable. Rent prices could go up as well. All assets could be completely out of reach for people. Oh, but they'll get their stimulus check. Oh, but they'll get their universal basic income. You see the problem here? Look, if you want this in depth, each and every week, I go with a small group of people on Zoom, and we go through these things on the Friday session where we're talking about the economy. I do a full presentation where we look at a few things. I talk about it in depth. Then we look at what's going on in the stock market. I show you the charts. All of these things are part of that small group. I call it the mentorship. And then the Sunday session is all about e-commerce. It's about business. We talk about how to make money. So there's two different things, whichever, suits your fancy. We can get into that. You can go to this page right here that I got lined up for you. You can get more details. You click apply now, and I will give you more information if you want that. Don't be shy. Reach out. I want to see you there. Link is right at the top of the description. Comment of the day. This is a funny one. Thank you very much for this. I was just thinking to myself today, I really just don't feel like I'm paying enough for my cost of living. Yeah, that's right. Don't we all? And it made it comment of the day, no question, because doesn't that seem like the way it is? It's like we're just getting, pushed and shoved, and it seems like it's never ending sometimes. Well, what we can do is do our best. We can get the new skills that we have, or we can monetize the skills we currently have. If you want more information, you reach out to me, and I'll see you on the next one. Take care.